Welcome to What's Brewing with IAT Insurance Group, where episode after episode we cover the latest marketplace trends with subject matter experts who are fueling our mission to provide insurance answers together. Grab your cup and let's settle in.
Hi, I'm Jessica Kernan, and welcome to What's Brewing. I serve as Vice President and Head of Aviation Claims at IAT. I'm joined by my friend and colleague, Rob Lombardo, today with IAT's VP of Aviation. How are you, Rob?
I'm doing well, thank you, Jessica. How are you?
Good. Good to see you. It's been a few weeks. We just got back from AIA, which is the Aviation Insurance annual conference. That was where different brokers, agents, other insurance companies, and reinsurers got together. But that was a lot of added value here, and I just wondered what were a couple of takeaways from that for you?
Well, anytime that we as underwriters can mingle with our brokers and build those relationships, we're going to take that advantage and run with it. And AIA provides that opportunity. It also gives us the chance to see our reinsurers, the people that support us and back us. We got to see new faces as well. We were able to put ourselves a little more in a bandstand than we had the previous years, giving us a little more of an opportunity in FaceTime. So
Sure.
Huge wins.
And I think too, one of the biggest things that was discussed during AIA was that there's a lot of new companies entering the market. So what's that thought process like?
Anytime a company enters a market, right, there's certain hurdles they have to get over, but they need to generate revenue just like anyone else in this industry. The problem is that a lot of our products are the same. So they only have a few options to sell here. One is customer service, 2, claims, and finally after that, it's really price. How do I get a foothold? And obviously lowering your price will get it in the door, but over time, you have to raise the price up to where it makes more sense, where it can handle the claims. Being a new market too, there's not many claims coming in the door just yet. So the brokers are not experienced in that area. So once again, price is a big piece that they're going to push again. And with that, it does have effect on us and other carriers where we have to make decisions on what accounts we're willing to allow out the door, and those accounts that we feel are valuable to us and we're going to put our feet in the sand and kind of fight to keep. It's something happens every time we have an expansion. And once things occur where the market's soft and there's consolidations, then that's when we're going to see the rates start to go back up again. But I'm hoping that the current situation is not going to be as long as it was in the past session that we kind of did through the really soft period. I think that lasted for a good, from 2007 until 2017, so probably a good 10, maybe 11 years, because it obviously had a little bit of a start before then. But once again, hopefully it will not be as long of a soft period.
Sure. And I think we talked about this a little bit, but when you're dealing with your partners, your brokers and agents, if there's a certain account and we may just decline it because we don't understand it, there were a few recommendations that you had brought up with that agencies, and what would that be?
And well, first off, if we don't understand the risk, we can't underwrite it. We can't underwrite the unknown. We take factors into account. We do something very similar to what I learned in school at Embry-Riddle, which was a 5M model. And the 5M model stands for man, machine, mission, mean, and management. And as underwriters, we're trying to consolidate all that stuff to something that we understand and to be able to make a decision. Man or live wire, it would be the pilot. The machine is the aircraft. Mission, what are they doing? Personal use? Are they doing a whole bunch of commercial operations? And what are they? And what altitude? And what's required of them? Are their passengers? All these come into factors. Mean is really the weather. Where is it located? In the mountainous area? Not many people think about aviation as we're not so concerned about where the plane is. We're just worried about the pilot and the machine. No, we do. We do care where the airplane is operating. And then, of course, management is key when we're dealing with these large charters or flight schools. Do they have the experience? We're not looking to underwrite some people that have no idea, but they want to get into it because it's a cool idea, and then all of a sudden vanish. But the broker needs to understand all that in order to supply that information to an underwriter, because we don't always get to see the risks. So we need something that is tangible or has something we can bite our teeth into that allows us to ask questions if we're on the side of unknowing, but enough to even make a decision.
Sure, and I think you even talked about just reaching out, just pick up the phone and call, and maybe there is a misunderstanding that we're seeing it on paper, but having that conversation is key. And that's kind of a really good point too to lead us. We have a lot of aircraft policies, but aviation is so much bigger than just insuring an aircraft. And there's a lot of other policies out there that that you can have that are related to aviation that may not be an aircraft.
No, I completely agree, but we'll cap off the aircraft piece. Most people don't even think about aircraft having accidents unless it hits the major news. Planes have accidents every single day. Gear up landings, when they do go down, in most cases, they're in rural areas. But once something comes in and it's a terrible loss and it crashes into cars or on the freeways, into a home, loss of life, all that comes into play. And there's a lot of liability that's associated to that. There are policies that we have that provide a lot of liability coverage for the insured. The larger industrial aid forms include garage keepers, hangar keepers, guest voluntary settlement, medical malpractice. There's a full gambit of liability exposures that we offer and basically protect the insured. Hull, or the aircraft piece, is usually pretty quick and easy. It's usually a first party loss in most cases, and we get in and we get out thanks to your team. The faster we can resolve these claims is obviously a benefit to the insured as well as to IAT. But in addition to the airplanes, you're right, we do have general liability, commercial general liability policies. We deal with FBOs, facilities that provide maintenance on aircraft, fueling of the aircraft. You and I were just talking. We just said it was close to being like a Buc-ee's. It is, but Buc-ee's only sells food and gas. We're talking more like a full service type situation. They still come out, pump the gas, and do a whole bunch of other extras. Blow a tire, well, they're there. And with that, obviously, there's a lot of coverages that get tied to that too. You have your hangar keepers. You got your prox and completed operations coverage, which basically deals with the loss after the insured releases it. Maybe they do maintenance on the airplane and they worked on some pieces on the engine or even on the avionics, and the insured flies away, and then 2 months later they have a loss. And it kind of rolls back into who did the maintenance. Well, that's your prox and completed operations. And that liability claim can be very difficult depending on the type of loss, especially if there's loss of life. Anytime we have a loss of life, we're expecting to be involved in this for some period of time, and rightfully so.
Sure. And to go back to a little bit of that maintenance side, we've seen, especially on the claim side, the inflation hit the book of business, and where, let's say even 2021, we saw the labor rates right around $100, $105. Now we're up to maybe $130 to $150. And that's a big deal. That's a big difference when you're talking about repairing an airplane that has damage. And that brings up another good point that we had talked about was insured value, making sure it's insured for what it's worth. And there's issues if it's under and overinsured.
Oh, I completely agree. If it's completely underinsured, IAT ends up owning the aircraft, and we're not in the market of owning airplanes. The intent is to make the individual whole again, right? Standard idea of insurance. Make you as you were at the time before the loss. Not better, but the same. And when you overinsure an airplane, well, we bump into the same situation where an aircraft that should be totaled is now being repaired. And there's that question, even though it's been repaired and it's supposedly safe to fly, do you really want to fly that airplane? And it comes up all the time. And we do our best to try to justify the values. And in aviation, we do use agreed value on our policy. So what we agree to, in the event of a total constructive loss, that is the full amount that we're going to pay out, less deductibles if they're there. So we are very conscious of that as an underwriter to make sure that we are insuring the airplane for what it is.
Right. It keeps the claims under control. It keeps you repairing what should be repaired and prevents you from repairing what shouldn't, if it should be considered a total loss. So,
agreed. And I want to touch a little more on that too. I mean, you bring up the inflation, the cost of repairs are going up. And you always hear, hey, why is his rate going up? Why is his rate going up? Well, we need to take that into account. I mean, it's a pool that we're building. We know the rates are going up because we need to offset for the increase in repairs. I mean, the price of materials are going up. The logistic issues of getting the parts at times where the aircraft is down even longer. And because of that, we now have to worry about ancillary coverages, rental of aircraft for the insured. All of those are new expenses that were not used as much until probably the COVID timeframe when the logistics came through. So when we hear that about the rates going up, the insureds and the brokers, they need to be aware that our expenses are going up as well. And the plan is to make sure that we can offset those expenses by obviously increasing our rates.
Sure. And I think what people too don't fully understand is the commercial market does trickle down to the general aviation market. We see all the issues going on with Boeing that are all.
That brings me to a good point, Jessica. With Boeing, I mean, Boeing, we understand they make their Boeing aircraft, but what else do they do for the GA market?
Yes, so, I mean, they are the producer of Piper aircraft parts. So if there's some shortage in supply or manpower, their priority is going to go to Boeing. And so that's been an issue for at least the claim side, is trying to get timely parts and repairs completed. We're seeing repairs take almost a year, which is unheard of. Engine teardowns are taking 5, 6, 7 months, depending on where you're at and what facility and the extent of damage, depending on what parts need to be ordered. So that's been a big issue, at least since the start of COVID.
Well, let's wrap that together. So how long was it before the logistic issue with parts? How long would it take to do an engine teardown and bring it back up on average?
It would be a matter of 3 weeks, maybe.
So that tells you right there, that ties back into those ancillary coverages that were not used nearly as much before. 3 weeks, obviously there's an expense, but not nearly as much as what you see now where the plane is gone for 6 months.
Sure, the hangar fees, even that, and then the hangar prices are going up. We used to pay $100 a month to store an airplane. Now it's $500, $600, $700 a month. That's just following the inflation. So there's been a few other kind of trends, at least on the claim side, that we have seen anyway. There's been a few mergers and acquisitions that we discussed a little bit at AIA, to kind of go back to that a little bit. But without going into those specifically, these mergers have created, I don't want to say a monopoly, but it's reduced the players in the market. And so we're seeing significant part increases as well, where, your Hartzell propeller is now 50% more than what it used to be. So we have people that are looking for different propellers and using those, but also going back to the Hartzell, we replace, part for part. So, if that's the case, it's just a 50% increase across the board, which again goes to your point of what you're talking about, these repair costs. So are there any other market trends or concerns that are in the industry now, Rob, that you can see?
We started off early about the new markets coming in, and we noticed it last year, and we're definitely noticing it this year as well, that rates are going down due to the competition, and going down to the levels that were probably soft market levels that we went through before. And I'm not sure if that is being caused because of the new markets and they're trying to get their foothold and biting their pieces and getting their space. But I will tell you that when you see more of the long-term players that have been in the industry for a long time and see them dropping their rates to levels that just don't make sense is alarming and concerning. That's my biggest issue right there that I see right now. The other stuff is underwriting decision making that we all have our own little bits here and there. Obviously, there's certain aircraft that are being produced that are worth a lot of value, and they're being sold to pilots that have less experience, and that's always a concern. I tell my underwriters always focus on the experience to value. We're no longer seeing gentlemen buying or women buying $50,000 Cessna 172s. Now we're seeing them buying $750,000 Cirruses, and they're still low-time pilots. And we still suffer the same losses, whether it's a $50,000 airplane or if it's a $750,000 airplane. Only difference is the cost of repair. And then there's always the concern of diminution of value. So I would tell you that is the biggest issue right now, is seeing that the value of these airplanes are going up, rates are going down due to competition, and just even anyone thinking and looking at that understands that there's a huge issue there. And at some point, you're not going to get enough premium to offset your losses. And I'd like to say that we've done a very good job at IAT in keeping that in mind and making sure we focus on the bottom line. If we grow the bottom line, we know that the top line is going to grow for us as well. But if we're not profitable, then we're gone, and the rates are going to go up anyway at some point, because once again, carriers will step out because they can't support the losses, and then acquisitions and consolidation will occur, and we'll be back to a hard market. But obviously, we're a player that has no intention on leaving. We've done a good job of building a foundation of writing good risks and controlling our losses. And I think overall we're in a good place to weather the storm that I think is coming.
And we focus on risk assessment and mitigation. And I know just from the claim side of the house, there's a couple claim-specific losses that underwriters don't like to see on loss runs or during a policy period. What would some of those be, Rob?
Well, I would tell you the biggest no-no in my book, and we'll just focus on that one, is fuel starvation. When it's not a mechanical type loss or there's a hole in the line, it's just poor pilot planning. Anyone that's a pilot or has taken an FAA written exam to be a pilot knows the importance of proper fuel for the flight that you're intending to take, along with the necessary fuel to go to another airport should your airport be closed for some reason. So running out of fuel without taking all that into account is really unacceptable. I mean, that's poor decision making. And then there's a concern after that of like, where do we go from there? If you're making a poor decision there, what's the next one? In some cases, we're fortunate that when that happens, that maybe you're able to put down on the road. But the next time around could be pretty bad. But, you got me thinking. I said I was going to focus on that one. The other part is the TBO. We as underwriters really rely on manufacturers approved teardowns and replacements. We're not in the market of research and development. So if the manufacturer of the engine says it should be replaced after so many hours in the Homs meter on the engine, then it should be replaced. And we're under the understanding that you're following those guidelines. If not, then we are the research and development department, and we're wondering how long that bearing is going to last before it fails. And if it fails, where does it fail? Does it fail over a school in a nice neighborhood? Does it fail in just a field someplace in the middle of nowhere? We don't know. And the unknowing is the real concern that we have. And I would say that it would be a difficult gamble for any underwriter to take. So if we find out that you're not following the FARs, which are really the minimums that you need to do, then we don't want to support it because
Right.
There's just too much unknown.
And I think you were talking too, as a pilot, you do your walk around every time. Every time you take that airplane up, you do your walk around and you look and see if there's any issues with the airplane. Specifically, you pull it out of the hangar and maybe you leave your tow bar attached and try to start it up. Your walk around prevents accidents like that from happening. And I think that would also fall under your under that bucket, right, Rob?
Agreed. Along with the locks, the elevator locks, and everything else that you need to pay attention to. Those losses go away if the pilot goes back to pre-flight 101. The walk around, getting the ladder out, checking the fuel levels, making sure everything is adequate, making sure everything is moving as it should. A lot of that is a very big deal. Even on airliners, the pilot still does a phase A, I want to call it, where they walk around the outside of the big aircraft, the Airbus or so forth. It's standard procedure. When we start to fly these smaller aircraft and it's your airplane, I think there's a little bit of complacency that occurs. I know my plane, I already did this and that, and instead of using the checklist and doing the step-by-step process, things are missed. And unfortunately, some of those outcomes are okay and some of them are not so okay.
Right. And those are the risks we're trying to mitigate, right?
We are. And I mean, we can't, let's get real. We can't charge enough premium we can't charge a big enough deductible to offset our exposures, our biggest mitigator is training. The constant training. And if you look at athletes that are professional athletes, they're always training. And there's a reason for that. And I think the focus needs to be the same thing with aviation.
Sure, and I think to make sure that occurs, you would add that in the pilot endorsement, right? Make sure certain trainings are done or requirements have been met.
Correct. Obviously, there's certain class of aircraft that we know that they have to receive a minimum of annual training. It's not required by the FAA, but it's required by the insurance companies. And typically that's your turbine equipment, pressurized aircraft, and along with any aircraft that is a cabin class type aircraft. But even the smaller ones, your Cessna 172s, you have 4 lives on that aircraft, right? Training, even on your little Cessna 172 every year, or every even 6 months. Maybe you have a friend that's a CFI and kind of go through things again, just to refresh stuff. Procedures you don't always think about. They have to be done over and over again, so it almost becomes like muscle memory. Because there's not many options when you're flying in the event of a loss. And if you don't know what you're doing, then the outcome is terrible.
Right, and the idea is prevent what you can. That's that.
Correct.
The Swiss cheese model you're always talking about when everything lines up.
No, agree. And even on the underwriting side, there could be an issue with hull value, and the insured doesn't want to respond back to it, but then the insured has a loss 3 or 4 weeks later. Just the fact that we as underwriters stepped in and said, hey, let's talk about the hull value. We've kind of stopped the cheese model. We blocked the hole, and obviously everything has to line up perfectly for that to occur. And, that's what my team looks for. It looks for things that make sense and allow them to actually quote it because they understand it. Or if there's something off, they put the brakes in.
Right. Well, I think that's all I had today. I don't know if you want to add anything, Rob?
Aviation is definitely unique, and there's a passion to it. And I'll tell you that when it comes to underwriting, we look for people that have that passion, because there's a lot of nuances that, as an underwriter for aviation, you have to know. We're very technical. We have to understand the machine that the person's going to operate, and we have to understand their skill level. And it's tough, but it's also a fun job.
Thank you for spending time with me today, Rob. It was a pleasure. And thank you for listening to What's Brewing, and we'll see you next time.
Thank you.
Providing insurance answers together is what we do best. Thanks for tuning in to the latest episode of What's Brewing. Until next time.